Hey guys, this is Mrs. Lamphere, and I'm just going to show you this is a quick recording going over the short answer questions for the Unit 3 exam. So I'm just going to kind of help you with getting started, making sure you're familiar with these templates. So for number 22, this is a lot like the very first assignment that we completed. You'll notice the table is very similar. We're wanting all of our assets to equal our liabilities plus our owner's equity. So with this question, the balance sheet of Miss Prompt Truck Rental on December 31st is as follows. And after December 31st, Miss Prompt Truck Rental had the following transactions for a short period. So you need to list the December 31st balances and then record each of the transactions appropriately. So I already listed them for you all right here. This is the beginning balance that we carried over. And so now you just need to copy in or fill in correctly for the transactions. So for instance, transaction A bought office equipment at a cost of $2,700 and we paid in cash. So first we need to think, okay, which two accounts is this going to affect? Judging by the accounts we have available down here, I would suggest you use office equipment and cash. And we're working with the amount of $2,700. So next we need to think, okay, we bought office equipment, so this is going to increase office equipment and decrease cash. So down here we're going to go under cash and say minus 2,700, and then under office equipment we are going to add 2,700. And you'll notice here then, after every transaction, I want you to calculate the new balance of each account. So our new balance for cash, after we take 9,500 minus 2,700, so our new balance is 6,800 there. Okay, and then same thing for office equipment. We're looking at, we had a previous balance of 3,800 plus 2,700 because we bought office equipment. So our new balance there then is 6,500. Okay, so those are the new balances for our those different accounts. And remember, this is the part we want to have be equal. Okay, we added 2,700 here, so we subtracted 2,700 here. And so we're still balanced on each side of the equation. Okay. So complete the rest of these transactions on your own. I will give you a heads up. This transaction E is actually going to involve 3 accounts. So we will always have our debits and credits equal. Keep that in mind. But we purchased a truck or 2 trucks for $30,500. We paid $15,000 in cash and signed a notes payable for the balance. So judging by the accounts you have available down here, you should see a couple of red flags stand out. We paid $15,000 cash. We signed a notes payable for the rest of the balance, so we have a notes payable column here. And we bought 2 trucks worth $30,500 total. So think about, it's going to affect all 3 of these accounts, but you have to tell me which amounts, and then make sure you're getting the balance of those transactions. And then after you've completed all the transactions, make sure you're adding everything up down here at the bottom, making sure that your assets on this side of the equation are equaling your liability and owner's equity on this side of the equation. Okay, that's number 22. 23. So for 23, 24, 25, these are all set up very similarly. For 23, the fast delivery service submitted the transactions given below. Analyze these business transactions. So it says analyze these transactions. So we're going to be answering all these questions. Which 2 accounts are affected? Which type of accounts are those accounts that we listed? And then completing the T accounts. And just, okay. So for this transaction A, on October 1st, Joseph took $25,000 from personal savings and deposited the amount to open a business checking account in the name of Fast Delivery Service. So he's making that $25,000 and making an initial investment into his business. So which 2 accounts are going to be affected? We've done this transaction several times before, so by now you should know it's going to affect cash and Joseph Capital. What type of accounts are these? Asset, liability, owner's equity. We know cash is an asset account. Joseph Capital is an owner's equity account. And then the next step is to complete the following T accounts. So we're going to change this T account, and we always want to list our debits first. Okay, so your debits should go on the T account on the left, and your credits should go on the T account on the right. So our debit account is going to be our cash, because we're going to increase cash on the debit side. I'm actually going to type that in like so. And we invested $25,000. And just to also remind ourselves that credit decreases on this side. And our other account we said is going to be Joseph Capital. And with an owner's equity account, we know that our debit side is going to be our decreasing side, and our credit side then will be our increasing side. So we're increasing cash by $25,000, and we're going to increase capital by $25,000. We have a debit in cash and a credit in capital. Everything's balanced out. We're good to go. So continue on with that for the rest of the transactions. I have a list of accounts over here for you. So you should be naming each account that you use. You can't, on your T account, don't just say asset, liability. Okay, you have to name each account for the T accounts. I also have this kind of cheat sheet over here for you, reminding you that assets increase on the debit side, decrease on the credit side, and how liabilities known as equity increase on the credit side. Okay, so that's number 23. 24 and 25 are set up the same way, except for they add in a couple more accounts to you. So you're going to also start working with revenue accounts and expense accounts. So I added them here for you as well, so you can see just a helpful reminder on which side increases and which side decreases and so on. So with this part, on number 2, I should also have asset, liability, owner's equity, revenue, expense, withdraw. Okay, so it could be, when you're telling me what type of account it needs to be one of these 6. And I think 25 is going to be the same way, yeah. So whether it's asset, liability, owner's equity, revenue, expense, or withdrawal account. Okay? And that is the Unit 3 exam short answers. Good luck.